Hi. We have decided to start the series on basics of accounting. Basics of accounting, it means golden rules of accounting, debit, credit, P&L, balance sheet, or basic stuff. Because 90% professionals, working professionals, they are facing challenges with basics of accounting. So why they're facing challenges? I'll tell you two reasons. One, when they completed academics at that moment, the commerce, the college situation was worst, and that's what they were maybe not attending college regularly. And the other fact is, so now they're looking for a job in investment banking, investment accounting, portfolio accounting, fund accounting. So if you see the gap, means 10 years back they attended the academics, and at the moment, even though that they haven't attended regularly, so it means there is a gap between their academics and the industry. Second thing, now they're working with accounting, investment accounting, but so they're facing issues or challenges with the understanding of the investment instruments accounting and all, and they have even the challenges with the basics of accounting as well. So we have decided to support you guys to develop or design the modules on basics of accounting, so which you can easily relate with the investment accounting as well. So I want promise from everyone that they would share this content with maximum audiences. If you can give me 1000 comments or 1000 likes to this video, then I'll develop the continuously series on the basics of accounting content. So without taking much of time, so we'll start. So today's session would be on golden rules of accounting. So at the end of this session, I'll help you, or throughout the session, I would say, I'll help you how you can link the golden rules of accounting with the investment accounting, like purchase of securities, sales of securities, interest payment, dividends, how you can relate that. I'll teach you that also. So I would request you, please carry pen and paper and note down each and everything, so which will help you to crack your fund accounting as well as portfolio accounting, investment accounting interviews. If you are a fresher, then without golden rules of accounting, hardly you would expect questions, right? So it means if you are a fresher or experienced, this session will help you to both the analysts who are freshers and as well as who are looking for a job change from other fields to accounting, investment accounting, reporting, auditing and all. So we'll start now without taking much time. So there are three golden rules of accounting, guys. So golden rules, when we say golden, it means there is importance, right? So when we say golden, so it means it's a very important one. So without that, you cannot record the transactions in the books of account. If you cannot record the transactions without golden rules, so it means without knowing the golden rules of accounting, hardly you would be able to perform the journal entries in the books of fund or rectify the errors and all, right? As simple as that. So it means rules, which are rules that you should know, you should pay attention and try to understand it. So let me clear you one thing about the golden rules of accounting, okay? You cannot modify that rule. You cannot alter that rule. And there is no even shortcuts which you can help you to understand it. Correct? Rules are rules. You cannot modify it. And that's what you should, whether you are from commerce, arts, science, engineering or any other background, that doesn't matter. Let's say I'm from commerce, but rules are rules for me, right? If you are, let's say, mechanical background, rules will be rules for you even. So it means there is no change in it. Whether you are from MBA, CA, CFA, I have seen CA as well, still they are struggling with the golden rules. I have seen many people in my career. So it means rules are rules. So keep one thing in mind. Rules, you cannot modify it. Rules, you cannot, there is no shortcut to learn or understand it. So rules are rules. So you should pay attention and try to understand it in a simple way if you can. And one more practice that I would like to share with you at the end of the session. So please be there with me and see. So golden rules are very important element of whether it is a normal accounting or investment accounting. Same golden rules, debit what comes in, credit what goes out in the real account, we follow in the investment as well as in a normal accounting as well, right? Same for personal. If you say debit the receiver, credit the giver, we follow the same rule in investment accounting, fund accounting, or any other portfolio accounting and all. There is no change in it. And the important one is debit the expenses and losses, credit the income and gains. Same rule that we follow in the investment accounting also. How I'll help you to relate that, how we follow that. So see it here. If I take the example of, I'll take the example for each one, then you can relate. Right? So if you see this, what are the different accounts that comes under the personal? See this, relating to persons, any person, any institutions, broker account, bank account, custodian account, JP Morgan, NT, those institutions that you can call it as a personal account, right? Related to institutions and all, or even individual names also. Let's say fund manager account or any individual account if you see, so that would be your personal account. And you can apply the rule which is debit the receiver and credit the giver. So it means if you see the name of person or if you see the name of institutions in the transaction, then you can apply the personal account rule. As simple as that. How? I'll take one example and explain it. Don't worry. Then if I talk about real account it means equities, bonds, debentures, or assets, building, land, furniture, or any data accounts, right? So those accounts you can consider as a real accounts, right? Those accounts you can treat as a real accounts. And when we say real accounts, then you can apply the rule debit what comes in, whatever comes in. If that is a real account, then you can directly categorize that account to the debit side. I'll explain that as well. So that becomes your real account, right? Stocks, goodwill, anything as such that you would see, even option trades, swaps, if you purchase it, and if you see that is your assets, maybe current or long term, or whether it is a good even, then you can treat that as a real account. Then finally, the one of the important again aspect is nominal account, relating to all the expenses and losses. If you see loss on foreign transactions, if you see loss on FX transactions, if you see loss on investment, right? Then expenses, let's say rent expenses, incentive fees expenses, management fees expenses, audit fees, custodian fees, that becomes your nominal account. So you need to apply, when you see the expense word in statement, then that becomes your nominal. Again, when you see word like interest received, income received, rebate received, commission received, due received from broker, subscription received, whatever that if you see, that becomes your subscription that you can treat as a credit balance in a different way, that becomes a liability. But yes, again, so whatever the income that if you see which the fund received, or maybe investment that particular investment manager received, then you need to treat that as a nominal account. And when we talk about nominal account, so we have a rule, debit what comes in, debit the expenses and losses, credit the income and gains. That rules you need to apply while performing the accounting entries for an income and expense item, right? So there are the main accounts which you would see in your investment accounting, or as well as normal accounting also. Office equipment that comes under your assets, computer equipments, building, machinery, bank account, cash, account receivable, stocks, or any investment if you see, because in a hedge fund or in a mutual fund, private equity, you would see investment like loans, bonds, debentures, loan obligations, that all comes under your assets. So you can record it as assets and you can apply the real account rule. Then liabilities, credit cards, account payable, income tax payable, payroll taxes, bank loan, overdraft. But when we talk about funds, the again expenses, accrued expenses that we can treat as a liability of the fund, right? Or any dues to broker, if you see any pending, or any exposure which is pending on any swap contracts, FX contracts, that can be treated as a liability for the fund, and that will be recorded in the books of fund as well, right? Then other one is equity. You would see same equity in hedge fund, but here instead, see, we even record it as a capital drawings, earnings, retained earnings in a fund accounting also. But instead equity we call it as their units, right? Units or shares. But again, that you can relate with the equity or similar, I would say, and you can record it out. Again, important aspect is income, sales, any consultancy, shipping and other income. So here in the normal business you can see all these items. But if I talk about investment business, in investment business you would see interest, dividends, or any rebate, interest on collateral, or if you see any kind of receivables, that becomes the income for the fund, and we record it in the books of account, right? And apart from that, then expenses, advertising, banks, consultancy, payroll, professional fees, and all those are normal business expenses. But in a fund, see, expenses are expenses, whether it is in fund, custody, broker, anywhere. When you say expense word, you need to apply the nominal accounting treatment. That's it. And in a fund business, the expenses would be incentive fees, custodian, audit, transaction, brokers, assignments. So the number of expenses, means list of expenses would be there. So you need to apply the accounting treatment as per the nominal account. So we'll discuss the examples. See, my job here is to help you guys to understand so how you can record the accounting entries in the books of fund, because entire accounting is based on accounting entries. Okay. So here we have examples. So I'll walk you through. So real account, it means debit what comes in, credit what goes out. Take the scenario here. We have it with this example first, real account example. So one example that I'll take it from the normal accounting, and same example I'll help you to understand with the investment accounting. So here if you see, paid cash for the purchase of furniture, accounting entry, furniture account debit to cash account credit. Why? Because cash is also part of real account. So when we say real account, it means cash will out and furniture will in, right? Then one account, again if you see here, one account you can record it at debit and another account you can record it at credit side. So this is how you can perform your accounting entry. So here if you see the brief introduction, brief about that particular entry, furniture is the real account, and real account rule is comes into the organizations, that will be debited. Cash, again it is a real account, that will be out, goes out from the organization, so that will be credited, right? So this is how you can relate and record the entries in the books of account. But from an investment perspective, how can I record it? I'll explain that also. Just take example of real account, but in an investment or in a fund. So you would see the entries like fund purchase equities, right? Fund purchase equities. A fund purchase equities, let's say price is 1,000 rupees. Then how you can record this? So it's a very simple process, guys. First of all, identify the transaction. If you want to prepare the accounting entries, identify the transactions. So here when we say purchase, right? So there would be two scenarios. One, purchase with cash, right? Purchase with cash, and another one, purchase on credit. If the purchase on credit, it means that becomes your accrual based accounting. because we have two types of accounting. And if it is not, let's say that fund manager paid cash. Here fund manager paid cash. So we are assuming it fund manager paid cash and buy the equities, right? Then this become your cash based accounting. So it means net transaction. Cash based accounting. So in this particular case, so we'll assume it, we have a cash based transaction details and we'll apply the accounting treatment accordingly. So how we'll apply the accounting treatment then? See, as I told you, if you want to prepare the accounting entries, you cannot mug up it, right? You cannot mug up it. First of all, try to understand this particular statement. Fund purchase equities at 1000 rupees. Fund manager paid cash. Fund manager paid cash. So it means it's a cash based transaction. So it means there are two accounts. One is purchase account and another one is cash account. So there are two accounts, right? And now you can apply, once you recognize with the account, then you can apply the rules. Cash is the part of a real account. Again, purchase is also part of real account, right? And then apply the accounting treatment. If I talk about real account, so we have a rule, right? Debit what comes in, credit what goes out. Debit what comes in, credit what goes out. Rule is very simple, right? Same particular transactions now you need to put into this particular rule. Debit what comes in, what you have comes in, purchase, write down then. Purchase account debit, amount 1000. Cash goes out, why? Again it is a part of real account. Then cash account credit. See this, I have prepared accounting entry now. So it's very simple. First of all, you need to recognize that. If you are not able to recognize, then nobody can help you guys. So it's a very, very simple method. If you are not able to recognize, then you cannot record the accounting entry in the books of account. I'll take one more example and see if you can, and I'll also give you assignment as well. So it means see if you can prepare it. So you can post it in comment section. Okay. So I'll take one more example. Let's say GMT fund sold the securities at USD on credit. So I have changed the statement. So first transaction was where the cash was paid out, right? When the fund purchased it. But in this transaction, the particular transaction is on credit. So when we say which is on credit, so it means in this case automatically your personal account come into picture, because someone is there who have gave the credit to you, right? So you need to ensure that the name of the person, or maybe if you don't know the name of that person, then you can create the receivables or payables as well. So in short, even this is a sell transaction. It means GMT fund sold the securities on credit to the particular counterparts. So now, so here try to recognize two different accounts. One which is sell of securities, that is a one account, alright, and another one is personal account. It means it's a credit purchase, a credit sell, right? It is a credit sell. So if you have recognized two different accounts, then what is the rule of sell account? Real. So real account says debit what comes in, credit what goes out. Again interpret the rules. Debit what comes in, credit what goes out. Here sell, once you sell it, that will goes out. So it means now you got the credit part. So what about the personal account? Debit the receiver, credit the giver, right? Debit the receiver, credit the giver. But here, if you see who gave this credit, let's say you are not aware, so you don't have the name of that particular person, then how will you record it? Then you can create the payables. So when we say payable, sorry, receivable, not payable. So you can create the receivable. Again, receivable is also part of real account. So debit what comes in, credit what goes out. Again simplified. So now you know it. So if I want to prepare the accounting entries, I know the debit effect as well as I know the credit effect. Sell is the part of credit effect, and when we sell it on credit, so that becomes the receivable for me. So I'll also, receivable again, it is a part of assets. So debit what comes in. So I'll prepare the accounting entry. Receivable account debit, to sell of investment account. $10,000. See this, guys. So it's a very simple to prepare accounting entries. It is all about practice. If you don't do the practice, then you cannot prepare the accounting entries, right? See how it is simple. So we have discussed two examples, so you can prepare it. I'll give you one example as assignments if you want, so you can try it later on, and or else submit your answer in comment section to see or to cross verify it. Okay, so let's say I'll erase this and I'll give you one assignments. Fund let's say fund purchase equity worth of rupees 10,000, broker applied, JP Morgan broker applied charges 100. However, this transaction executed on credit. So prepare this accounting entry, prepare journal entry. And submit. So you can submit this in comment section to see if you can prepare it. If you are not able to prepare, maybe in next session I'll cover this. But yes, you should try to prepare it out. Okay. So note down this, guys. So I'll take you with a different account then. So another account is nominal account. So nominal account says, nominal account rule is debit the expenses and losses, credit the income and gains. So here we have an example with the nominal account. Here, paid utility bills. Paid utility bills. Bills is the expense that is debited, and again cash will out. So ultimately cash that you need to record it to the credit side. See the situation, nominal account expenses are debited, cash again goes from the organization, right? So I'll take one example, means real example, so which you can relate and learn it wherever that you are working as an accountant, right? So if I take the example of admin fees. Admin fees, it's an expense, and we have a rule which is nominal account, right? Nominal account, it means debit expense, credit gain. See, it's your responsibility. First try to understand it. Expenses which will out from the business, income which will come in your business. Whenever anything that if you see, so that you have expenses will come out, it means eventually cash will out from the business. And when we say income, then cash will received in your business. How? We'll see that with this example. Let's say admin GMT fund paid admin fees $500. The GMT fund paid the admin fees. As I told you, admin fees, it's an expense. When we say admin fees, it's an expense, so it means that you need to, admin fees that will be debited. Simple, right? And in this transaction there are two accounts. One is expense account, and another one is cash account. So it means two accounts. Here cash is the real account. You know the rule of real account. Debit comes in, credit goes out. So here now you got the credit side as well. Then prepare the accounting entries. Just simply just put the values, as simple as that. So here you have a debit leg, and here we have also got the credit leg. Then accounting entry would be admin fees, account debit, to cash account, total this. See this, right? It's very simple. See, if you want to prepare accounting entries, it's a very simple. Just see guys, there is no difference between normal accounting and fund accounting. Let me just clarify it. It's just matter of the items. Here this is the investment business. So in investment business you would see investment language, right? It's just matter of language. It's not a difficult one. So I hope now you got the idea about expenses as well. So same, just replace the name. If you have incentive fees, just replace the name and record it in a similar manner. Okay. So so last account that we have, that is personal account. Personal account, debit the receiver and credit the giver. So this applies in case of credit purchase or credit sales. So if you see credit words whenever that come into picture, then you would see the relation of personal account. Personal account is, see, the real account is the advanced version of personal account, I would say, because whenever that we receive something, then let's say if you accrued expense and income, in that case also if you see, we create the receivables and payables, right? Ultimately that affects on your assets or liabilities. So here we have the example where cash paid to Amazon. So if you have paid cash to Amazon, it means Amazon, it's an institution account and cash is the real account. So this entry come into picture, Amazon account debit to cash. Why? So try to understand the rule of a personal account. Debit the receiver, it means Amazon received this amount, debit the receiver, and credit. So here from entry perspective, credit the giver, right? Here you need to record the cash because the fund paid cash to the Amazon in that way. Okay, so I'll explain with the real accounting entry, means from an investment accounting perspective, so you can note it down. So let's say fund received subscription from the GMT fund received the subscription GMT fund received the subscription from investors, right? Let's say amount is 500. So you can create the accounting entry in the books of fund. So it means GMT fund received subscription. So GMT fund can record the accounting entry, cash account debit to investor A account. Let's say 500, right? So in that way also we can prepare the accounting entry. But yes, when the investor paid cash, so that cash we treat as a capital, then you need to transfer this investment to the capital account. So how we can transfer? For a transfer, accounting entry would be debit investor account for a transfer of investment to the capital account. Transfer the investment to the capital account. So process would be investor A account debit, to capital account. So why capital account credit, sir? Again, it's a rule that you need to apply, right? So when you apply the rule, liabilities, capital we treat as a liabilities always we record to the credit side, okay? And then investor A paid it capital, then that you need to transfer that capital to the cash to the capital account. So this is how we prepare the accounting entries in a reality as well. So you would see many other entries also with the different things, but this is just a base that I wanted to explain to you. If you want to pro, as I already told you, if you want to pro in this accounting entries and all, see guys, without practice, it's not easy to prepare accounting entries. As simple as that. If you don't want to practice, then you cannot learn accounting entries. If you want to become a pro in fund accounting entries or investment accounting entries, then you need to practice a lot. Every day spend 10 to 15 minutes, not much, for practicing of accounting entries. And how you can practice? Your daily expenses, your daily income, whatever that you have, try to put it into the accounting entries manner, journal entries manner, and prepare it. Every day, you have a smartphone, so you have a note app, so why don't you prepare there and see? So you might see, big change in your understanding of accounting entries and all. So I follow the same thing, and I'm giving you the simple tips. I know that you're a working professional and you don't have time to spend on it, but you can follow the simple techniques so which will help you to enhance your accounting skills. If you want to become a successful fund accountant, then or investment banker, I would say, so you need to work on three things. Already I told you I'll give you tips at the end of the session. So this is the tips. One, the basics of accounting, golden rules, personal account, nominal account, capital, expenses, income, balance sheets, P&L, trade book. This is gonna be a very essential with concepts, I would say. Okay, the first thing is your accounting skills. Second, then your again products means equity, bonds, debentures. You should know it if you want to become a successful accountant or investment banker. And third thing is financial, budgeting, or you can say capital budgeting skills. For example, let's say initial investment, payback period, then internal rate of returns, valuations of different financial products, or decision making kind of that you can say. So it is a must to know it. If you have all three skills, trust me, you don't need to look for a 30% hike. There are companies who need a people who can resolve their business problems. They'll offer you more than 30% hike. Don't restrict yourself for 30%. Okay, just you should work on your skills. If you work on your skills, companies will pay you more than that. Mark my word. Just effective from today, shift your focus on performance, learn the accounting in depth, learn the financial products in depth, and then go ahead and shine. Okay, without learning you cannot achieve. Might be one time that you will get a call and fortunately you will get selected, but this will not repeat again in future. Don't rely on that. Focus on your performance, focus on your learning every day, add some values, and then see automatically you would see good kick in your career as well. So we'll see you in next session. If you like this initiative, I would say please guys, hit on like button, comment button, and share this with others also. Let them also learn it. If you like this content, if you share this content with others, then only see that help me to again develop the more content for you and to simplify it. So in upcoming time, you would see a lot of content on different topics that I'm gonna cover. But I need your support. Without your support, I cannot grow, right? I cannot even go ahead. It's simple because I'm spending ample amount of time to study and all. But out of it, if you guys are not even recognize it or not sharing this content with others, then that doesn't make any sense. That demotivate me a lot. So if you like this content, it's a humble request. Click on bell icon button, click on share button, share this content with others. How you can share it through WhatsApp, your FB profiles and all, share this and let them also means other also learn it. Okay, so we'll see you in next session. Thank you, best of luck, enjoy it.